Welcome back. Yes, we're watching Closing Trades right here on ET. Now, James Hughes, who's a senior market analyst at Alpari, joins us on the phone line with a quick perspective of what's really happening in the market there. James, as we speak, the UK December inflation number is coming in at 4.2% year on year, which is in line with the forecast. What is the expectation now in terms of how things may shape up in the Eurozone and what that may do for equities as a whole?
Well, I mean, it's given things a bit of a boost so far this morning, that number coming in line with expectations, as you say, but falling pretty sharply. I mean, the previous month was 4.8% on that inflation reading. We're now at 4.2%. It's actually the biggest fall in inflation since April 2009 in the UK. So it's a pretty good number, and I think the expectations have always been that in the first quarter or so, even moving into the second quarter, we could start to see this inflation fall down, and the Bank of England have always reiterated that into 2012 we would start to see inflation fall lower. In terms of the grander scheme and looking towards the Eurozone, I mean, we'll have to wait till 10 o'clock to see the numbers out of the European for the European CPI, but of course there's so many stories moving around in this Eurozone at the moment. We've had the downgrade overnight of the EFSF from AAA to AA, so that's been we're worried the markets to start off with, but of course we're seeing stronger equity markets in Europe anyway, so it seems that though that feeling of nervousness surrounding what happens from the ratings agencies is really going away, and the market's become more numb to this now. We've had France downgrade and the other European countries as well as the EFSF, so there has been a lot of downgrades which the markets are pretty much ignoring.
What is then the expectation of what the euro would do, because now it's at a 17-month low?
Yeah, I mean, I think the euro is a strange one because everyone's been asking for such a long time why it's been holding up and why it's been so strong during this whole Eurozone crisis, and it seems that now we're maybe getting a little bit more of a move. We're starting to see maybe some real levels of the euro where it should be when we're looking at all these downgrades, and that's really where we see the reaction to these downgrades from ratings agencies is in the euro. But still, with this EFSF one, we haven't necessarily seen too much. And what the EFSF have come out this morning and said that they're not necessarily too bothered by one downgrade as long as the likes of Moody's and Fitch don't follow S&P with a further downgrade. So I mean, I think looking towards the euro, we've seen such a big fall recently. We're maybe looking at things to recover a little bit, but of course a lot depends on economic numbers and just how the market and the Eurozone can react to these downgrades, and whether we can get talks back moving again with the likes of Greece, and whether the downgrade will affect the EFSF's borrowing power.
Thanks, James. Thanks so much for joining in today and giving us that perspective. That's the view on the global markets, but our markets have done extremely well. Markets are near the day's high, lots of stocks moving around in trade. Let's talk about